Hey guys, it's Sasha. Pinterest posted their Q3 results last week and the stock exploded as soon as those results came out. Pins is now trading at about $25 as I'm recording this video. That's 14% up after the results. And the weird thing is, Pinterest is a company that makes its money from ads. Ad revenue is down across the board because the economic environment is changing and people are spending less money on ads. And every other company that makes their money from ads is getting absolutely slaughtered in the stock market. Google is 10% down after their Q3 results came out, and Facebook has been completely obliterated, down 32% in the last week. Now, there is a lot more to what's happening with Facebook than just the ads, but still. Pinterest seems to be about the only company in this group that's actually doing well. And I want to break down what those Pinterest results mean for you in this video. I will share the good and the bad bits in the video, and I will share my Pinterest stock valuation model and my target price. Just remember, I am not your financial advisor. I am just a random guy on YouTube sharing his opinion, so please take it for what it is. And also remember, I am a Pinterest shareholder, which means that my take is probably going to be biased. So let's dive right into the numbers. So what the hell is so good about the Pinterest results? Well, first up, Pinterest posted some very solid financials. $684.55 million in revenue for Q3, a very solid result, all things considered, up 8% year on year. The downside in the P&L is on the cost front. You can see that pretty much every single cost for Pinterest across the board has absolutely ballooned. While revenues have gone up 8%, costs are up about 40%. And as a result, Pinterest is stamping losses again when there was a net income this time last year. And there is a good reason why all of this is happening. Pinterest has seen green shoots of very solid growth with their ad and sales platforms and have gone to town on reinvesting money back into the business this year. They've been hiring extensively to push that growth even harder. And here's what Bill Reddy, the new CEO of the business, said on the earnings call. 2022 was a year of elevated investment for Pinterest as we leaned into a number of initiatives that we believe will drive durable long-term growth. Additionally, the team and I have gone through an extensive review of our portfolio of initiatives to be sure we're focused on the highest yielding activities. The benefits of that additional investment and heightened focus are coming through in product impact, particularly in engagement and revenue. We're also focused on driving efficiencies in the business. As we discussed on the last call, we intend to return to meaningful margin expansion next year and have already started those efforts. So the increased cost as a proportion of revenue is part of a short-term strategy for Pinterest to fuel business growth in big numbers over the coming few years. And Pinterest is a very unique business because it has several different ways in how it operates. It is not a social media platform. It is not a search engine. It is not a shopping platform. It is a mix, an amalgamation of all of those things. First, let's look at the user numbers. And user numbers have bounced for the first time since the post-COVID slump. This is very encouraging as an investor. You can see that US and Canada users went up from 92 to 95 million. Europe went from 117 to 120. And the rest of the world is up from 223 to 230 million users. It might be 0% year-on-year growth. There might be some extenuating circumstances like the recent iOS update has helped, but Pinterest, along with every other social media network, has seen a big slump in user numbers and in engagement over the last 4 quarters. So this is the first time we are seeing the bounce back for Pinterest. That is very encouraging. And I do know what you are thinking. This purple and blue color scheme is indeed horrendous. It is not as bad as the yellow and green puke style color scheme that Pinterest went for last quarter, and they've done some really bad red stuff before that. They have been changing it every single quarter for the last 5 quarters since abandoning the old design in Q3 last year. Hopefully the intern putting together the slides for next quarter in Q4 will not be colorblind. Anyway, the next really important point about Pinterest is it is a mix of programmatic and manually curated content. The discovery part of Pinterest is programmatic. This is how Pinterest tries to show you pins and boards that you might be interested in, but then the boards themselves are actually manually curated, generated by the people creating content on Pinterest. And this is incredibly powerful because you get highly relevant content all together, neatly arranged and presented in an ordered way. The reason this is especially good for business is that Pinterest is a platform with very high buyer intent. A lot of people pin things on Pinterest that they plan to spend their money on. That's what the platform is used for. People pin their holiday ideas on how to decorate their house, new bathroom that they want to replace their old one with. You name it, there is a board with ideas on how to spend money. And that is somewhat unique to Pinterest. It means that ads shown on the platform should in the long term trend to very high revenues because ads are being shown to people who are in the shopping mindset while being on the platform and actively looking at things that they want to spend money on. But even more interesting than that is it means that Pinterest can now start selling these things that you are looking at right on the platform, which is exactly what they've recently started doing. They've built an API for the shopping experience, and a whole load of reinvestment in the business is driving this acceleration of the development of this protocol. This is a graphical Amazon-style aggregation process where you can collect a whole load of the commercial upside from taking your cut on every sale going through the platform, but without the need to have the logistical and operational nightmare of delivering the goods, owning warehouses and 10 gazillion delivery vans all over the world. This is really unique, and from where I'm sitting, this is incredibly powerful. They are barely starting to scratch the surface of this potential. As an investor, I am extremely excited as to where this might go. And you can see the revenue per user numbers on the next slide in the presentation. They are doing really well and going up. Global revenues are at $156 per user. This is still super low, super early on in the journey compared to other companies like Facebook, for example, who made $9.41 per user in Q3. And remember, Facebook is a platform where you see a funny cat video that your granny tagged you in. Pinterest is a platform where you actively plan to spend money. In my opinion, the long-term ad potential on this platform is very different. And yet Pinterest is still making 6 times less per user than Facebook. The good news is that revenues are up year on year, except in Europe where the war, high inflation, foreign exchange rates, all of these things are altogether causing the numbers to be suppressed this year. This really interesting revenue line for Pinterest is in the shopping ads, the one that we can't see. This is the bit where you can buy stuff without leaving the platform. Pinterest are holding their cards very close to their chest. They're not sharing what the actual size of this part of the business is yet, what proportion it is of the total. Still probably very, very small, but here is what Todd Morgenfeld, the CFO, said on the earnings call. Our shopping ads revenue, which comes from promoted catalogs, grew 50% year over year, accelerating from the quarter prior. We're beginning to see traction in some of our emerging verticals like automotive, financial services, and travel. These segments grew significantly faster than our overall revenue. So the shopping ads have grown 50% year on year, and that growth is accelerating. The rate of growth is increasing. Pinterest is investing a ton of money, a ton of effort, a load of people into shopping, and they're expecting the growth to continue accelerating. They're still just getting started. Pinterest seems to be focusing on all the right things for me. They are pushing more engaging content. Users are coming back more often. They're doing video pins, other rich formats. They're letting users save the things that they want to spend money on their boards and then come back later and buy them right there without having to leave the platform. Pinterest captures the user at the initial research and ideation phase. And then because they intercept the user there before they are ready to buy, they can then bypass all these other vendors and complete the whole buying journey selling you on the platform. Really neat. Not so good if you are a content creator trying to abuse Pinterest to drive traffic to your website or things like that, because Pinterest is increasingly sending less and less traffic to other people's website, and that trend will only continue. But as far as Pinterest's business goes, for investors, pretty good. Everything else on the business also looks very, very similar to last quarter. We've got the balance sheet, which is absolutely insane. Just look at this. $1.67 billion worth in cash, another $994 million in marketable securities, another $511 million in accounts receivable. That's almost $3.2 billion in cash or equivalents. Current liabilities for Pinterest are at $344.7 million. So they currently have enough cash to keep the business going at the current rate for about 9 years without earning a single dollar. That's mind-boggling. And total liabilities for the business are at $547.7 million. There is no debt at all. This might be the best balance sheet of any company out there. It is pristine. And it's surprising because Pinterest is an early stage growth stock. And if you look towards the bottom of the balance sheet, there is $2.1 billion worth of accumulated deficit, money the company has lost on its growth journey. So the pretty funky end of this is that over the next few years, as the company starts churning actual profits, those profits won't have to pay tax because you get to carry forward these losses indefinitely and you can offset up to 80% of the taxable income in future years against it. I updated my Pinterest model, and to be honest, there isn't a whole lot to talk about. It is still looking just as good as it did before, pretty much, because the results came pretty much bang on. Compared to last quarter, I have made a few downward adjustments though. My target price has dropped slightly as well. I have tuned down the user growth rate numbers even further because of what we've been seeing in the market overall, because of the Europe effect with the war and everything else financially going on. I've also suppressed revenue per user growth to account for a whole mix of different macroeconomic headwinds. And I increased the cost at the top of the page to account for higher spending than what we're seeing this quarter. So in general, all assumptions are moved to a slightly more cautious, slightly more conservative outlook. I felt it was cautious last time. I've gone a little bit further. I might go even further next quarter depending on how the economy progresses from here. And I updated everything on the front page too. I have 21% tax in here, so I'm not adding in all of that tax benefit that I just talked about. I'm keeping it as a nice bonus cushion for when it happens. Discount rate set to 10%, long-term growth rate set to 5, EBITDA multiple to 22 because Pinterest is still, for me, a relatively early stage growth company, and in 5 years' time, they're not going to be all that mature. And I get to a target price range of $50.38 to $65.18. Now, I still think that somewhere towards the top end of that, somewhere near to the EBITDA multiple makes far more sense here. My target price was $65 3 months ago, and I'm going to bring it down a notch. So for me, I've moved it to $63 this quarter, which gives me a really solid 150% upside versus the $25 share price as it is roughly today. So I'm still extremely happy with this position. I am looking forward to seeing what Pinterest delivers over the next few quarters, and over the next few months, I will hopefully be buying a lot more Pinterest stock if I manage to get some spare cash. Let me know in the comment section what your thoughts are, what you're doing on Pinterest. Thank you so much for watching. I really appreciate it. And as always, I'll see you guys later.